Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and hope everybody is having a wonderful evening out there. Certainly, quite a fantastic time in the silver space. A lot of interesting things going on. And tonight, I am joined by the great Rob Kientz of Gold Silver Pros, who's got a really super cool pink light in the background there. Now it's changing colors. Wow, that is great. So Rob, welcome on in. How are you tonight, sir?
I'm doing good, Chris. Thanks for inviting me.
Yeah, and thanks for getting that light. That is fantastic. Chris Marchese of silverseek.com, as well as, is it Gold Seeker, I believe?
Did Gold I get it Seeker, right? That's our subscription service, yes.
Goldseeker.com as well. Chris, welcome on into the show tonight. How are you?
Good. Always good to be with you guys.
Well, it's always good to have you here. I enjoyed talking with you quite a bit today about some of the interesting events going on. And fortunately, just when you think it couldn't get more fun, there is David
Smith.
Oh, he's logged in on my phone. I was going to have like such a smooth segue until I did it as awkwardly as possible. But David, welcome on in, sir. How are you?
Pretty good. How about yourself, everybody?
I am wonderful. Can you get a little closer to the phone, perhaps? A little hard time hearing you there.
Yeah. How's that sound?
That is better. Welcome on in, sir. How are you? It's good to have you here. And we have one last voice from the ether, Jim Forsyth. Jim, great all-around patriot, researcher into gold and silver. Jim, it's great to have you here, and let me know if there's another title we should throw on there, sir.
Chairman of Citizens for Sound Money.
Oh, Chairman for Citizens for Sound Money. Jim, he's poking the bear early because I'm gonna try and stay focused here. I think maybe we will do this call about the difference between the SLV price and the silver price. Maybe we'll kick up a second session after we're done to cover what I think is the official launch of the Joe Biden hyperinflation campaign. I guess I'm saying that somewhat lightly. I'm not trying to be inconsiderate. I mean, I've dedicated my life to sharing what I know. Although, I mean, the stuff that is happening there, it's kind of in that realm where it's like, I don't know, I could cry or I could be angry. I mean, some of the stuff that's coming out is so wild, but we'll leave that for later because fortunately, we talk about silver tonight and dig into why the price of SLV, which I will pull up in a second, is different than the silver price. And also, I saw an interesting tweet tonight that mentioned that the spread is about $1.70 now, which I was surprised to see. I'd always remembered it being about 80, 90 cents or a dollar, somewhere in that range. Turns out that it's been wider for quite a while. It's not necessarily that it happened tonight or in the past month or two, but either case, I have these experts on the line, and we thought it would be a good time to explain why exactly you see here on Kitco. Of course, we could use the futures as well, but I'll pull up the SLV price. And Jim, since I know you're have a commitment you're on your way to, why don't you take it away and share what we should look out for here?
Hey, actually, give me 1 minute and go to somebody else.
Sure. And in fact, during that 1 minute, I will comment that here we have SLV, which is 22.26 relative to a Kitco chart of $24. So about $1.75. And I know I hear Dave Kranzler is in the chat tonight. So I know he's probably getting irritated already that I'm not using the futures contract. And I understand that is better metric to use, although to the degree I have my fixation with the Kitco chart, and I think there are others do as well. At least we'll look at a $24 price on Kitco and $22.30, let's call it, on SLV. And Jim, are you ready now? All right.
Yes.
Well,
Sorry about that.
there we go. Jim is ready. So why don't you take it away and explain how that works?
Hey,
Jim, are you there?
I'm really sorry. You guys I was trying to tell you before we got on that I was picking up dinner for the family here. So you caught me right as I pulled up to the drive-thru. Yeah. So
Well, what do we got for dinner? Let's get.
this
We'll
little
stick to silver. In either case, what do you have for us?
Okay. So yeah, I mean, you could ask the same reason why is the PSLV price so far down below silver price. It really is. It's just a matter of how many ounces per share they have. PSLV, I don't know what the logic for wherever they started at. It might have been the Canadian price or something, where they did half an ounce of silver per share. But SLV started at the same price per share, 1 ounce of silver per share. But then you have the storage and vaulting fees and the management fees. I don't remember exactly what it is for SLV. I think it's in the 0.3% region. And to pay those fees, they sell silver to pay the fees. Same with PSLV. They have to sell a little bit of silver. Or if they've recently sold shares for cash, then they use the cash. And so the number of ounces per share gradually declines over time. And enough times pass with SLV that right now it's 93 or 0.93 ounces of silver per share, or 93%. Now, if people look at my Twitter feed at Jim Forsyth 5, I plot a relative comparison of spot versus SLV versus PSLV, and then taking the ounces per share into account for that. And SLV was trading a little bit below spot, but pretty close. PSLV traded 0.5% to 1% above spot today.
Jim, are you still there?
Yeah, I was done.
Oh, okay. I didn't know if we lost you. Chris, what do you think about that? Anything you can add to what he shared there and help put in perspective for?
Can you share my screen with everybody?
Yes, I will stop share of mine, and I believe you should have screen share enabled.
Okay, so here it is. So the expense ratio, like Jim was saying, it's 0.5%. So, that doesn't sound like much, but you compound that over 15 years, because I think this will be, the inception date was around May 1, 2006. So then it should necessarily trade with about a 7.77% discount. So I plug in, $24 spot, and I get 22.27. Is that? I think that's about the SLV price.
Yep, I got 22.26, 22.29, somewhere in that ballpark.
Yeah, and then the same goes with the leveraged like AGQ, the leveraged silver ETFs. Those will decay faster, so they will disassociate themselves from spot or twice spot a lot more quickly, because I think the expense ratio is almost 1% on that.
Excuse me, Chris, I can't see your screen share yet.
Oh, how do you see it now?
No.
You hit the green screen share at the bottom.
Let's see. Oh, here. Okay, here we go. All right, so here it is.
Rob, do you want to tell your joke again while he gets the... Oh, no, he's got it. Rob told a joke. I was a little flustered. My computer's slow, and I know people get cranky when I'm late with these episodes, and Rob mellowed it out with a great joke, which maybe we'll save for later. So, Chris, go ahead, please.
All right, so like I was saying, expense ratio, 0.5%. Inception date, I think, was May 1, 26. So it's about 15 years. You compound that, that's, almost 7.8%. If you have a $24 spot, which I think is what it closed at today, the SLV would be about 22, 27.
Yep.
That sound about right?
Yeah, that's your time compounded discount.
Yeah. So, I think that's natural. And, this grows every year very marginally, but, when it's over a decade, it starts to add up.
Yeah.
And then, the same with the leveraged ETFs, the expense ratio. I know for AGQ is about twice as much. So there'll be twice as much discount to what should be net asset value.
So Chris, are you saying this is similar? I know with those 3x levered ETFs, the way the math breaks out, there's a drift towards zero. So it's like those can be good for like a short-term bet, but if you leave it on long-term, it just naturally drifts towards zero. Are you saying that's how SLV, amongst the other incredible features of it, actually
it's much slower because the expense ratio is about half of the double leveraged, and I would guess about a third of the triple leveraged. And half a percent doesn't seem like much over 1, 2, 3 years, but when you got 15 years since inception, and say it was 1%, you get a pretty big discount.
Although, again, Chris, you have some experience with Morgan Stanley in the banking world. What's your thought on the whole? What is it that people are actually paying fees for here?
Well,
it doesn't.
I can tell you, they're not those that 0.5%. There's no way that it costs that much to do what JPM is doing.
We don't even know what they're doing.
Yeah, I don't think they have the silver. If they do, it's maybe 10%, and that's being very generous, in my opinion. And they're all part of the same system. They're not going to be charged this much if they even did have this much silver. So I would look more to I don't know what the Sprott, the PSLV expense ratio is, but I would say that's more accurate because I don't believe Sprott's part of the system.
Chris, do you think that if the bond of paper silver that they move back and forth is say 12 rather than 24, that would make it a little bit easier for them to charge less when they carry the boxes back and forth of paper silver?
Theoretically, I guess. I don't know. The whole system is so corrupt that these guys that want to keep the price down for good reason, and that includes the banks, the government, the exchange, so CME, COMEX. I don't think 0.5%. It needs to be nearly that much given their connections, but they got to pay themselves. They got to make a little bit of money on the silver they don't have or don't insure, aren't liable for in any way.
You got to figure Jeff Curry's appearance fee isn't cheap either. Being in all fairness.
Wait, did you say Jeff Christian or Jeff Curry?
Well, now we're getting into. Rob, would you like to take it from there, and I'll stop.
Yeah, if you don't mind, I'll share a screen with some charts that I have. Real quick, if Chris, you could stop your share, and I'll jump in and do a share of my own.
So let me see that.
Auditor Rob, what would you say about the SLV silver spread?
Yeah, we got it. So I had a couple of charts here because it's something that kind of fascinated me, and my subscribers had asked me about for a long time. Rob, what's the difference between the SLV and investing? And silver itself. And so I endeavored to do some studies a while back and put some of this on my website, on my university, if anybody's interested, Gold Silver Pros University. So I wanted to do a couple of charts here to talk about the difference between SLV, which is here in blue, as you can see up here, and then the silver's futures price, which is in red. And essentially what we see is that it doesn't happen that often that there is a wide spread between the SLV and the silver price, but there are times at which that happens. And per what we've all talked about on this call, the last few minutes, there is a discount because there's a cost to SLV. And I'll show you a chart that illustrates the time value of that here in a moment. I did want to point out that you see a fairly big spread forming in 2020. So we had a fairly big spread between the silver's futures price and the SLV here at the last part of 2020. And again, is occurring in the early part of 2021. And that's illustrated by the difference in price between the red and the blue line here and the red and the blue line here. And you can see a clear trend the last few months of how there's a widening spread between the futures price and the SLV fund, which I think has been fairly persistent, dating back about 6 or 7 months.
Rob, can I interrupt you for a second?
Sure.
So I don't know the mandate of the SLV. Is it supposed to track the futures price or the spot price? And
well, it's supposed to be close to the spot price, and generally spot and silver futures are generally pretty close, to the point that I'm comfortable using the futures price, because if you look at the futures price, the way the futures trade actually pull the direction of the spot price, even though they're not identical. So it's a good point to make, though. The futures price I'm just using as a proxy here for spot, but they're usually pretty close.
Okay.
But I believe the SLV is supposed to as closely track spot as humanly possible, with the understanding that there is going to be a discount because they have management fees, and it's a derivative product. So it's a managed fund. And so it's always going to be a slight discount to the silver price. And I believe that's covered in their prospectus. Yeah. So the last time that we had some divergence was back when silver was shooting up to its 49-ish mark back in 2011. The silver price did diverge from SLV a little bit there. The interesting thing to note is we're not at an all-time nominal high in silver price, and yet we're seeing a more persistent divergence between what you're going to be able to buy physical silver for and what you see in the SLV. More of a consistent divergence than I've seen anywhere else on this chart dating back to 2006. So I was looking at that earlier today and I thought, that's interesting. So the market seems to be telling us that they value the spot or futures price of silver more than they value the SLV, and there's a widening discount. So the market is giving us a widening discount there, and it's telling us traders, I think, prefer a higher, or value the current and future price of silver, say 2 to 3 months from now, than they do the SLV. If we look at silver's price to the SLV fund, you see this upward slope. You would expect to see that where the SLV is going to trade to a discount to silver over time because of the management fee. In other words, if you put your money into physical silver versus the SLV, you're going to, over time, and this is illustrated by your spreadsheet, Chris, you're gonna realize better value because you're not paying those management fees. So this upward sloping line is normal. What I find interesting is that this volatility, which occurred at the height of the financial crisis, and then again as silver's reaching, its $49, $50 price, its all-time nominal high. Those patterns, occurred during a time of crisis and a very highly volatile market for silver reaching a nominal high. And we're seeing it again here. We're seeing all of this volatility in the difference in price between silver and the SLV at a time when silver is trading at a relatively modest $24, $25. So what does that tell us? It tells us, again, the market does not believe that the SLV has the same value as physical silver. And there's really a battle going on in the market between traders between physical silver, or the near-term spot price of silver, and the SLV fund. And again, I think that's telling us the market doesn't believe that the SLV fund should be valued at the same price as silver. And further, I would go on to say, I think they want the silver price to come higher. I think that's what that chart is telling us. So I think both charts tell us that this divergence is people valuing the physical and the near-term price of physical more than they are the SLV. And this volatility is telling us that they don't believe, one, that the price of silver is really where it should be, or two, that the SLV is an appropriate proxy given the current supply shortages we're seeing, especially on the retail side. So those are sort of my thoughts on what those charts are sharing or telling us.
Well, I sure appreciate that, Auditor Rob. And before we toss it over to David Smith to get his comments on that, we did have a question from Justin that, Rob, this one might be for you, let's say, or anybody else. SLV Prospectus says they can liquidate anytime they feel SLV expenses get too high for shareholders to profit. You would think he was kidding, but I think that's actually pretty accurate. Who gets the silver if they liquidate?
I believe the short answer in the prospectus is the authorized participants are responsible for providing.
Goldman?
Sorry?
So Goldman gets the silver if they liquidate?
Yeah, the authorized participants, which by and large are the bullion banks, are the ones that provide and get the silver out of the fund. And the shareholders are financing that activity, but don't have direct access to the actual silver, is my understanding.
So it's the same corrupt banks that are orchestrating this that get it in liquidation.
David Smith, given that JP Morgan was Bernie Madoff's sole banker, do you think maybe he helped them set up the SLV fund, and just to save some time on the documents, they reused the same template? What do you think is going on here? David Smith. Wow. Okay. I thought that was
you hear me now? Yeah.
Oh, there we go.
Yeah. It wouldn't surprise me, but then nothing would surprise me. But, I have a comment and a question for Robert. The charts for many of the silver stocks are really terrible looking, and they're breaking down. Some of them are actually threatening to negate the 2016 breakout. And I'm just wondering, how do you reconcile, or do you attempt to do that, of the relative weakness of many of the mining stocks in relationship to the perceived desire of the market to acquire physical silver and not care for SLV as much, which makes a lot of sense on that part. But how do you reconcile the mining share problem in that regard?
Well, I think, and this goes back to data provided by a good friend of mine, Kai Hoffman, who runs Orn Inc. And tracks junior mining investment across all of the mining space for Canadian companies. And since 2011, we've seen an overall decline in the amount of investment into the mining space. Just free investment from third parties, new investment, share price participation, whatever you want to call it. There was a spike at some point last year where it looked like we may be getting back to the mean overall for the last 10 or so years in investment into the mining space, but it's fallen back down. And so there isn't as much investment from the investment complex. So say from the hedge funds, it flows into ETFs and such, and private investment money coming into the mining sector. So I think the miners have had to do more with less. And so there is not as much new development going on as one would expect given the current prices for silver, and I would also say for gold. I would say that leaves the miners undervalued, because if you start looking at their income flows for the last year, as we've been in this leg of the bull market for gold and silver, a lot of them are making money. When you look at First Majestic, once silver hit $20, they sold their hoard, and then they've been making money hand over fist in the silver space. And if you look at the gold miners, most gold miners will make money around 12, 15, 1300. So they're making a good profit on their operations. So we're seeing a couple of good quarters of income returns for the mining space. It's just the private investment hasn't caught up. So the general public is not aware, because you don't see those investment dollars coming in. Maybe they're off chasing tech stocks and Tesla and Apple and so on and so forth. But those dollars have not come into the mining stocks, even though they're starting to become very profitable. So I look at that and say, okay, this is the time to go in and buy, because from a value perspective, at some point, those stocks have to pop. At some point, especially if you see general issues in the economy or you see a stock market correction, people are going to hunt for value and they're going to look at the mine stocks and you're going to see big funds go into it. I just don't think we've seen that move yet.
Thank you. And many of the profits, as you kind of imply, are in record territory for a lot of these companies. I mean, they're the best they've ever had. So
Yes.
with the gap that seems to be, I haven't seen a chart in recent months that plots the gap between physical metal and the share price, but it must be at least as big as it was a couple of years ago before this rally started. It wouldn't surprise me if it's as big and maybe actually is expanding right now. Like,
I believe you're
bringing
right.
more
Yes.
power to the undervalued proposition that you just referred to.
Yes, I believe you're correct there. And I think it creates an enormous opportunity for the metal miner investors.
The question becomes how deep does this go before you stop the bloodletting of the stuff
Yeah.
you're buying, trying to catch that falling knife.
Well, I think the miners will actually be okay. I mean, they can, for the most part, they can continue operations. What I'm more worried about in the long term is exploration and development, drilling, stuff like that, development of projects, because if you don't have money coming in, investment money coming in, that could stop. But, if you go back to what Rick Rule says, the cure for low prices is low prices. And the cure for high prices is high prices. Eventually that'll revert back to the mean. It's just going to be a matter of time.
Thank you.
Adding on to what you guys were talking about, I've noticed that silver companies are trading much more appropriately relative to, say, net asset value or price to cash flow multiples than gold is. For example, First Majestic right now is still trading, pro forma with the Jarrett Canyon acquisition, about 2 times NAV. There's a lot of intermediate gold producers that are trading below 1 times NAV. So I see a pretty big discrepancy between the valuation of gold miners versus silver miners. Granted, silver miners have always traded at a premium relative to gold, most likely because they're far more rare. But that's just something I've been noticing, especially over the, this year, I would say.
Well, that makes sense. And I know Jim had to get running, and we're actually going to start wrapping up here because we have a big call coming up about the Biden hyperinflation, as I think decades from now it'll be known, kind of like the Hoover plowing over his crops while people were starving to death. I have a fondness for Coolidge because he seemed to like making Hoover jokes. But in either case, did we lose Jim? It looks like Jim just dropped off. But anyway, David Smith, did you have anything else you wanted to add or any parting words? And if you want to stick around and join the Biden hyperinflation call, you're welcome to do that as well. Although anything else on this topic with the spread between SLV and silver?
No, I've learned some things here, and I appreciate Robert and Chris's analyses on that. I'll stick around for a little bit and see how things evolve.
All righty. Well, I'm excited to hear that. And Rob, any parting thoughts? By the way, everybody watching at home, I'm about to break the scoop of the century. I don't think Rob Kientz knows what it is. I don't think David Smith knows what it is. I don't think anybody else knows what it is because nobody else would be checking for such a thing. But Rob, any parting thoughts before I break this scoop?
Well, now you piqued my curiosity. Is this going to be an options thing, Chris, or is this going to be
better?
Is this historian Chris looking into the depths of silver price manipulation?
Not even a ballpark, Rob.
Are some of those silver bars behind you from the Perth Mint?
Better.
So parting words here for everybody would be definitely don't lose heart if you're in the precious metal sector. I still think there's tremendous upside in the metals and in the mining space. And again, I'll go back to what I always say, wait till you have your first banking failure or bond issue, and you'll realize real quickly how valuable the precious metals are. Stay in it for the long term. The fundamental arguments have gotten stronger for investment in the precious metals, and everything is a bargain right now. So From my perspective, if you're looking to get in the sector, now is the prime time. And, pretty soon it's going to be where you're not going to find an entry point like this, and you may not be able to find the physical. So now would be the time to invest if you're looking to do that.
Well, I think that makes a lot of sense. And again, that is the great Rob Kientz of goldsilverpros.com. So thank you, sir. And Chris, any final thoughts on this one?
Just kind of adding on to what Rob said, these markets will wear you out, and a lot of people will throw in the towel only to see prices rise to unthinkable levels. And they're kicking themselves after. Seen this too many times. Just hang in there as long as you understand and believe in the fundamentals. Nothing else really matters.
And Chris,
And you don't want to be in the dollar. Just get out of the dollar. How about that?
Yeah, well, that's something everybody can support, or they can do it along with Putin rather than the people who get clobbered after the move is complete. Although, Chris, were you starting to quote a little David Morgan there? You're like, it'll wear you out. And then what's the other half of that?
He's had I worked for him for so long. He's had a big influence. So.
David Smith, what's the end of that quote? Give us the whole thing. What's his line there?
It'll either wear you out or scare you out.
Yeah.
That's it.
So speaking of things that can scare people out, like I mentioned, we are going to cover the Biden hyperinflation plan, which is, I hope I'm not offending anyone. I'm not trying to, but it's like, we're at the point where this is disturbing, the stuff that they're tossing out there now. Although I see there was one question in the chat about the Perth Mint. So before I get to the breaking scoop of the century, interestingly, we did have an update from the Perth Mint. They said, we invited at the West to our refinery to photograph the large amount of silver stockpiles currently available, including 60 tons for sale to investors right now. Now, to be clear, I'm sitting in Austin, Texas. I don't really have the first darn clue what's in the Perth Mint vault. Hopefully it looks something like my snazzy closet here. But obviously John Adams, who's in Australia, has been reporting a lot of stuff. Has been hearing from customers who've been having issues. I don't need them to photograph it, but if there's someone reporting, hey, things aren't adding up, suggested, could we invite John Adams so that he could publicly address the questions he had found?
How about we hire Rob to go do a proper audit over there to make sure metal isn't already allocated metal.
All right, let's get a plane to get Auditor Rob over to Australia. So that's the latest I've heard about the Perth Mint. I don't know. So we'll see what comes of that, but they are going to take pictures. I don't know if that tells you if the bar is leased out or anything like that. I was listening to a Bix video where he did comment that they have something referencing leasing. But since we have an important call coming up in a couple of minutes, and I promised a breaking scoop, now, I've been waiting. Obviously, everybody knows it's like stocks. Some people look to Warren Buffett as the king. In silver, I defer to Jeff Curry of Goldman Sachs and his great knowledge. I was getting concerned because I kept checking to see if he had any new videos coming out. And I would type in Jeff Curry and click on most recent upload. And it'd actually be my videos coming up, which I took as a badge of honor. Although live on Arcadia Economics, you cannot get this type of coverage anywhere else. The great Jeff Curry. I was worried he had quit with that mass exodus from Goldman that we've been reading about. But Jeff, with a great haircut, is going to explain in just 3 minutes and 13 seconds that there is room for gold and Bitcoin to coexist. So in either case, I just wanted to share this great news. I have not even watched that yet.
He's an expert, everyone. You have to listen.
Well, Chris, I would agree, except the better way to phrase that, he's an expert at everything and everybody. So you'd be wise to listen. So we're going to wrap that up here for now. But I thank everyone for being on the panel. And if anyone wants to see CNBC said the quote, Joe Biden, they said the new plan was going to dwarf the 1.9 trillion. And here's my favorite part. They said that they did earlier this month. Earlier this month.
It's exponential spending growth by
1.9
the government. Congratulations.
It's MMT.
That's right.
Well, we're going to dig in. Thanks for everybody watching at home. I hope you're having fun there, and go take a restroom break, get a cozy beverage, and we will see you again in a couple minutes. All right. Well